Hello, it's Robert Miner with Dynamic Traders Group, and this is our fairly brief video for our YouTube and Twitter subscribers where we look at a market that may have a good trade opportunity in the upcoming week. Today, we're going to take a look at the gold market. It looks like gold may be coming up to what we call at least a weekly low, maybe even a monthly low this coming week. At the very latest, the coming 2 weeks, before the end of September anyway. So we're going to take a look at that. If you like what you hear, needless to say, subscribe to us, hit the like button. And also, if you're interested in some more updates that we do during the week, go to dynamictraders.com, hit the Traders News tab, and register for our Traders News. It doesn't cost you a thing. We don't need any charge card, just your email address. And now and then when we have some updates, other than these video updates that we do for YouTube, we'll send you an email and let you know that they're available. Okay, that's it. Let's get started and take a fairly deep dive into the gold position and the potential trade strategy in the days ahead. This is the gold weekly data, and there's about 3 things I want you to note from this chart of the weekly data. I marked off some of the weekly highs and lows over the past several months. And I showed you these before in past months when we've looked at gold, because it has a really nice 4 to 6 week reversal cycle, weekly reversal cycle. So anytime you reach week 6, you really want to be aware of a probable weekly reversal. So you can see over these past several months had a weekly low here, and it was 6 weeks from the prior low. 6 weeks later, a high. 6 weeks later, a high. It was 4 down, 4 up, 5 down, 3 up. That was an unusual short period of time. And then this coming week, next week, is week number 6. And that should be the maximum time before a weekly low is complete next week. So even though we had this significant decline this past week, which is a lot of people are going to be pretty bearish on that, and it was a new weekly closing low, we want to be aware of the time factor and the reversal cycle next week for a probable weekly low. Weekly momentums have reached oversold, again, warning that potential weekly low coming up pretty soon. And this past week did a sharp decline right in to this significant target around 1669 to 1628. That's the 100% alternate price projections of this prior decline in April, May. That was 7.66%. And the June, July decline, that was 8.84%. We do 100% alternate price projection by percentage change, and that gives us this zone, and that's exactly where gold has reached this past week. This is also a gold weekly chart. It's the continuous futures contract, so I'm taking it all the way back more than a couple of years back. And here's what to be aware of. This is just simple, basically chart analysis. Forget the Elliott Wave stuff I got on here for now anyway. And this was a triple bottom into the July low. We can see there's one low and then a test of that low. It was only 1 week, but came down to test it. And then the low in July came right down to this level as well. And then this past week, we both exceeded these lows intra-week and made a lower weekly close. What we want to be aware of is the potential of a capitulation and a fast decline. So we're going to go look at specific trade strategies to identify if a weekly low is going to be made. And while there's a lot of technical evidence that's the case, you might want to wait until the end of this coming week and see if gold makes a higher weekly close. You won't be picking the bottom, but you'll be much more safely developing a specific go long strategy if gold makes a higher weekly close next week. And because if it does that, that means there's no follow through to this break below this triple bottom. If there's no follow through, and if this area holds, that's significant within itself. That means there's a lot of buying coming into the market around this level, and it successfully, we might say, defended that triple bottom and end up it's going to be a quadruple bottom. Okay, so let's get back to the daily data and look at the near-term position and a specific trade strategy. Well, a quick announcement before we continue on. If you like what you're learning here, and if you want to be prepared for the specific reversal signal and trade strategy, for instance, for gold in this coming week, if indeed it makes that reversal signal, you might want to consider our DT reports. Very inexpensive, lots of educational material, as well as 3 times a week we take a look at the major financial markets and which ones are in the best trade position. So check us out at dynamictraders.com. Hit the tab that says DT Reports. Learn all about our DT Reports. Very inexpensive, very educational, very helpful, I'm sure you'll find. Okay, let's take a look at some specific, at least potential trade setup in the gold market in the coming week. So this is the gold December contract, and let's take a look at the key technical positions here. I'm going to start at the bottom. The daily momentum just reached oversold on Friday. So it's warning that a daily low, daily momentum cycle low is very near, probably not complete on Friday, but could be. What's important is that with the weekly momentum cycle oversold, when a daily momentum cycle gets oversold and makes a bull reversal, that's called a dual time frame momentum reversal. And that's a dual time frame momentum setup to consider that a weekly low is being made and to develop a go-long strategy. This past Friday was the 100% alternate time projection of the last decline, the June-July decline. That's indicating that gold is in a time position to consider and to be aware of a probable low. And next week is pretty significant. Next week is, of course, the Fed announcement, as well as the fall equinox. We always want to be alert to solstices and equinoxes for potential reversals. Don't ask me why, but it just happens a lot in the financial markets. So whenever an equinox is within a few days of a Fed announcement, we want to be alert for a probable reversal. And given that we're in a weekly position for a reversal and a daily position, we want to be alert this next week, really alert for a probable reversal. Let's just take a look over the last few months of where these Fed announcements and the CPI announcements have been relative to potential reversals. Going back to June, as we had a CPI announcement, the next day a sharp decline, a little bit of a rally, and a couple days later was the Fed announcement, a few days after that, the solstice. So those were the period when we had a minor correction, and it was only after those periods that the trend got underway on the downside. So again, we had a CPI announcement July 13th, just it was sideways going into that and then continued the decline. And then a little bit later, a Fed announcement again, sideways into it, and then continued the advance. The high in August was made right in the CPI. The recent high was made 1 day prior to the CPI announcement. And boy, what a wonderful time to continue this sort of pattern would be to either be sideways to down into the Wednesday announcement and Thursday equinox, or even if it was kind of sideways to up and then we come into the Fed announcement where then the bull trend would accelerate following the Fed announcement and the equinox. So boy, this week, we want to be really alert because all this stuff is coming together for a probable weekly low, at least 2 or 3 weeks or so, sideways to up. A good trading opportunity following this Fed announcement and the equinox this coming week. And again, a warning is that you might want to wait. I'll go back to the weekly. For the weekly, next week, the weekly bar to make a higher weekly close on Friday. We get past those report times. We already know we're in a time and price zone to complete a weekly low and just make a higher weekly close. It's not picking the bottom, but it'd be like this last weekly low. We made a weekly reversal signal, a higher close, and then we were 3 weeks sideways to up. It wasn't any sort of significant bull trend, impulsive bull trend, but it was a 2 to 3 week trend, and 2 to 3 week trades can be very profitable trades. So let's be prepared for that this coming week. And of course, if you want to keep up to date with a specific trade strategy, check out our DT reports. If you'd like to get other updates on immediate trade strategies and trade positions, check out dynamictraders.com and our Traders News. The link to that is in the comments section below, and you can sign up. We just need your email address. We'll get you other updates during the week. And remember, trading is about identifying conditions with a high probability outcome so you can develop specific trade strategies with low capital exposure. That's it for today. Robert Miner, over and out.